All right. Okay, you can have the floor.
Those slide on hitam ke?
It's black now. Belum.
Slide those. Those.
Okay.
Macam ni eh? Okay. Today, Assalamualaikum, good afternoon everyone. Today I will present about transfer pricing. My name is Muhammad Kushairi and other members Muhammad Firdaus bin Sanid, Sarafuddin bin Samad and Muhammad Zahid Anik bin Zulkifli. Okay, what is transfer pricing? Okay, transfer pricing is an accounting practice that represents the price that one division in the company charge another division for goods and or service that they are provide. And transfer price is based on market price in charging another division, subsidiary or holding company for service that are given or rendered. Company have used intercompany transfer pricing to reduce the debt burden of the parent company. Company charge a higher price to division in higher tax countries to reduce profit while charging a lower price for division in low tax countries. Okay, let's say manufacturing company have two division, that division A and division B. Where division A is software, manufacturing a software, and division B making a car, manufacturing a car. Division A sell the software to the other car maker as well as its parent company, while Division B pay for Division A for the software that at the market price. Okay, let's say that Division A decide to charge a lower price to Division B instead of using the market price to as a result, Division A sale or revenue are lower because of the lower pricing. On the other hand, Division B cost of goods sold are lower and will increase their profit. Let's say that Division A is in higher tax country than Division B. The overall company on Division A can save their tax but make a less profitable, and Division B will become more profitable. By making Division A charge lower price and pass to saving onto Division B, it will boosting its profit through a lower cost of goods sold. Division B will be taxed at lower rate because he is in lower tax country. In other words, Division A made the decision to charge to Division B at the lower market pricing to make a company award for pay higher tax. Nak tahu? Okay, scope of transfer pricing. Under Income Tax 1967, a person who enter into transaction with an associate person for the acquisition or supply of property or service must determine and apply the arm's length price for the acquisitions or supply. In other words, the law requires taxpayer to determine and apply the arm's length price on controlled transactions, following which the Director of Island Revenue is empowered to make adjustment to the transaction to reflect the arm's length price by substituting the transaction price with the arm's length price. Okay, arm's length will be explained more detail by Firdaus later. Okay, meaning of control. The ITA refer control both as direct and indirect control. For example, a person shall be taken to control of a company if he able to exercise or is entitled to acquire control, whether direct or indirect, over the company affair, or if he possesses to greater part of the issue share capital of the company. Okay. However, on Finance Act 2018, there's a fair effect from 1 January 2019. The meaning of control under the ITA has been expanded to include the situation where the share capital held by person is 20% or more, alone with satisfaction of either of the following situation. The first one is the business operation of that persons depend on the property right, like patent, no patent, technology, no trademark or copyright that provided by the other person or the third person. The second one is the business activities such as purchase, sale, receipt or service, provision of service of that person are specified by the other persons, and the price and other conditions relating to the supply and influenced by such other person or third person. The last one is where one or more of the director of member of the board of director of a person are appointed by the other person or the third person. Next, I will pass to Firdaus.
Thank you, Sherry. So, I will continue. So, next is the Armlang Principle. So, what is basically the Armlang Principle? The Armlang Principle is, first, the objective is to minimize the possibility for double taxation. So, since the transfer pricing is transfer in terms of the same company but different division, so maybe it will have just a double taxation. So to avoid from it, the government introduced the Armlang Principle. Next is according to Armlang Principle, transfer price is acceptable if all transaction between associated party are conducted at arm's length price. So what is arm's length price? Basically is the price which would have been determined if such transaction were made between independent entity under the same or similar circumstances. So I will explain more after this. And arm's length principle is stated in paragraph 1 of article 9 of the Organization, Economic Cooperation and Development Model Test Convention. This is an example to understand more what is Armlang Principle. So for transition 1 is company A produce apple and sell to distributor company B. And company A and company B are not related. So because of this, there is no uncontrolled transaction. And the term and condition are considered to be at arm's length. And for the transaction 2 is the company X produce same apple, but this company sell to the distributor. This the distributor are related. So that means that the transaction is the control transaction. And maybe does not satisfy the arm's length principle. So for the conclusion is we can say that the term and condition of transaction 2 are also at arm's length principle if the transaction 2 follow like transition in transition 1. So this means if control transition follow like uncontrolled transition, so it means that it follow Armlang principle. Uh, so next is determination of Armlang price. There's a few steps and a few choice how to determine of Armlang price. So for the first one is analysis of transaction and function. So this means that this functional analysis is to need understand and related party transaction, business operation, function performed, asset employed, and risk assumed to determine of characteristic of taxpayer business. And next is characterization of business. This means the most common characterization based on the nature of activities such as manufacturing, distribution, and service provider. And the third one is identification of comparable transaction. This means just compare the level of transaction based on what is being used to compare, such as compare in a bundle of transaction, result at gross margin, result at net margin, and etc. And the fourth is tested party. Tested party is a transfer pricing method can be applied in the most reliable manner and for which the most reliable comparable can be found. This means basically that's what will have one common transaction that will be used by other companies. So to easy to determine the Armlang principle, they will use a tested party. And the fifth is selection and application of transfer pricing methodology. And I will explain more after this. And the last one is profit level indicator. This means they will choose by the ratio of the price, such as return on cost, that is cost plus margin, and not cost plus margin. Return on sale, right, gross margin and operating margin. And last one is return on capital employed, that is return on operating asset. For the transfer pricing methodology, before the method being used, following must be considered. Basically, the following is if you want to use the transfer pricing methodology, we need to ensure that uh, all the data and all the data, like especially, is accurate and can be determined. So the first method is comparable uncontrolled price method. That means compare price, charge, or property service transfer in a controlled transaction. Same like the Armlang principle. And the next is resale price method. So for the easy understand is resale price minus resale price times resale price margin. Resale price margin is sale price minus purchase price sale price. This means resale price minus Armlang price to determine Armlang price plus method. The application is Armlang price to determine Armlang price, cost plus cost time cost plus markup. And cost plus markup is sale price minus cost. And the next one is profit split method. For this transaction is for this method is transaction profit method is the main profit that arises from control transaction among associated person. So the profit method to satisfy the Armlang principle are those consistent with the transactional profit split method or the transaction net profit margin. And the last one is transactional net margin method. This method is examine the net profit margin. So the how to determine by cost plus or resale price method should preferably be derived from comparable uncontrolled transaction between the same taxpayer and independent party. So for the next, I will pass to Zahir.
Zahir new member kan? Dalam list asal tak ada nama Zahir.
Betul. Dia baru masuk.
Saya lambat
Sebelum
masuk.
ni group mana?
Belum ni saya tak ada group, saya lambat masuk.
Okay.
Okay, Assalamualaikum. My name is Muhammad Zayani. So I will continue with two type of transaction, special transaction in transfer pricing, which is the first one is commodity transaction. Okay, as stated in public ruling, transfer pricing guideline, it said that commodity is a physical product for which a quoted price is used by independent parties in industry as preference to set price in uncontrolled transaction. And what is the meaning by quoted price? So it is refer to the commodity price which is obtained in the applicable period in a domestic or international exchange market. Quoted commodity price generally reflect the agreement between independent buyers and seller in the market on the price for a specific type and amount of commodity trade under specific condition at a certain point in time. So this independent party buyer or seller can get the information to make sure their agreement on uh, quoted price they can get from statistical agency or government price setting agency.
Zahir,
Yes,
just
saya.
I have to stop sekejap. Alright, transfer pricing is a very important topic, alright? And I would say that it's one of the most difficult topic lah of all that. Yeah. So can you just summarize, or any member of the group just summarize actually transfer pricing ni apa? Why is it so important? Why it has to be regulated? Boleh tak you jawab tu? Why you need all this regulation, right? You have public ruling on transfer pricing. Why? Apa yang penting sangat transfer pricing ni?
Leader those, how?
Doctor.
Yeah.
Transfer pricing ni important because the conclusion is, tengok conclusion dos.
Sebab you banyak bagi apa?
Since the transfer pricing adjustment made by the IRB from transfer pricing audit will subject taxpayer to high penalties, they should encourage you to be prepared for tax audit by understanding and meeting your obligation under the law. Because
tapi tak menjawab my question. Okay, I say, okay, what is transfer pricing? Jangan baca slide. Don't read the slide. What is your understanding on transfer pricing?
When one company have a control transaction with another company, to avoid double taxation,
Okay, so when we say that it's a controlled company, means that there's a transaction between one company and other company, and these two companies are controlled. What do you mean by controlled? Just now you said that it has a shares of 20% or more, right? Okay, so these two companies are controlled. So what happens is that when company A sell to company B, they are normally, because they sell at arm's length price.
Yes.
What do you mean by arm's length price? Kenapa tak cakap at normal price je? Apa beza arm's length price dengan price biasa?
Dos, can you explain those?
Okay. So for my understanding, so basically if the normal transaction that's made in uncontrolled transaction, so basically the company will want to generate profit. So there is no like hidden agenda or anything like to avoid taxpayer like that. So if the control transaction, that mean company is control other company. So that mean there's maybe have a hidden agenda like to avoid the tax. Is it like that? Okay?
To avoid the tax. Okay. I would say I'm not sure. Okay, I tell you because I don't actually understand topic transfer pricing ni. That's why I bagi you buat kerja. Alright, because if I don't ask you like this, I'm sure that all other students, alright, when listen to you, alright, they may not be able to actually understand the topic, right? But I ask you because I want to understand. Okay. Okay, so I think, I'm not sure, all right, because you know better than me because this is your expertise sekarang ni. Okay, transfer pricing. And the good thing about transfer pricing is that kalau you go to a big firm, alright, dia memang one unit or one department. You're talking about PwC, because I was in PwC, so I know, right? You go to EY, there is one department untuk transfer pricing only, you know how important this. So what happens is that when you have sales between your controlled companies, so last time kita panggil related companies, alright? So normally dia pakai arm's length price. Arm's length transaction means that the price is normally lower than the normal price you sell to third party. Right? So that's how I believe what is arm's length. Tadi you tengok balik, you ada cakap kan what is arm's length tadi? Ada slide you on arm's length. Apa ni? Minimizing possibility of double tax, according to arm's length principle. A transfer price, okay, transfer price now is acceptable. So transfer price ni price yang you sell to your related party lah. That's why they now transfer price. Yeah, acceptable if all transactions between associated party are conducted at arm's length. So bila arm's length ni, it means that you cannot sell too low, right? Of course, normally you sell lower than the selling normal price, but it cannot be too low. Effect of being too low is that bila you punya sales price is too low, you punya profit akan naik lah, kan? So that's all. That's why dia kata dia akan gunakan benda ni in order to play around whereby, okay, kalau tax rate is high, you don't want to pay a lot of, you don't want to create a lot of profit kat situ. Kan? Katalah country A, tax rate is 30%. So if you make a lot of profit in country A, you have to pay 30% tax. Another country, where you also have a company, right, associated or controlled company, tax rate is 10%. So you want to make a lot of profit in this company so that you don't have to pay a lot of tax. Right? So what they do is that for those high tax company, high tax country, all right, what do you do? Because you don't want to make a lot of profit, right? So you will sell at lower price or higher price?
High price.
Lower market price.
So lower price means lower profit. Lower profit so means that you only have to pay a little bit of the profit to high tax country. Betul tak ni?
Correct.
I think you mentioned somewhere in your slide.
Betul.
Because if you explain all these, alright, all these are technical. But if students are not able to understand what's so important about transfer pricing ni, right? Because you baca je, we will not be able to absorb that, right? I almost go to sleep just sekarang. Tapi that's how I have to interfere. I have to make sure that, alright, you actually understand the topic. Not only you, alright, other students must also understand this topic. It's very important, right? If you're very good in transfer pricing, alright, you can actually demand for your salary. Okay, if you can say in your survey, I have a special knowledge on transfer pricing, right? You can sell yourself. Okay, coming back tadi, itulah. So bila you baca, I pun macam ni, I can't actually absorb. Okay, other students, you must ask question now before they go into, because after this, Zahir tadi nak pergi into explanation kan? Example, is it?
Commodity and intangible. Then I will explain about documentation and penalty.
Okay, kalau you cakap balik, kalau if I were to ask you again, why is it so important about this transfer pricing? Kenapa government, you cakap tadi kan, conclusion you kata, company must be aware of the transfer pricing punya regulation in order to avoid penalty imposed by the government. So why is it so important for them? Kenapa government nak impose penalty on transfer pricing?
Because they want to avoid company to evade tax.
To evade tax. So that's why bila the transfer pricing, dia kena arm's length price tu. So dia kena make sure it must be within the arm's length price. Not too low and not too high. Too low maknanya kita tahu kita nak price low so that you don't have to pay a lot of tax. Alright, but those country yang very low tax, you nak jual mahal. That's why dia nak control benda tu. I think lah, I don't know, you are the expert. Okay, let's see, Zahir. Apa you nak cerita Zahir pasal commodity? So it means that I think that Zahir punya slide will start with the commodity transaction ni, nak cakap pasal whenever you have this kind of commodity, bila ada commodity transaction, these are the rules, isn't it?
Yes.
Kalau ada lagi satu benda?
Intangible.
Kalau intangible transaction, these are the rules. I think that is more on how to decide on the arm's length price, is it?
Yep. How to decide their transfer pricing for these two transaction.
Okay. So you kena explain, jangan baca, you have to explain so that people understand. And other students, I macam I said dah soalan final ni untuk transfer pricing. So topics that you have presented, alright, all these topics will be in your final exam. So you better ask if you don't understand. Okay. And I know that, okay, I tell you students, yeah, this presentation, even though you say that, okay, presentation, this topic is this group, right, but you really have to understand, because if you want to wait until final exam, then only you want to read about the topic, all right, it may be too late, right? Even the group that presented maybe forgot about the topic already. Yeah, so if you don't understand, please ask immediately. Okay, let's hear commodity transaction.
Okay, right. So alright, okay, so commodity transaction, the first commodity itself stated by public ruling is physical product that use a special term to what? To know their transfer pricing. But for commodities, it calling quoted price, which is quoted price is agreement between independent buyer or seller in the market on the price for a specific type and amount of commodity trade under specific condition at certain point in time. Macam ni aku explain ni. Okay. So for commodity, the transfer pricing method that perfectly can be used is comparable uncontrolled price. As mentioned by Daus, comparable pricing method is it is compare the price charged for a property or services transfer in controlled transaction to the price charged for a property or services transfer in comparable uncontrolled transaction, but in a comparable circumstance. Okay. So the method, this method, CUP method is using for calculate the arm length price. So it can be applied when the economically relevant characteristic is comparable between controlled transaction and uncontrolled transaction. So what is, okay, the type of economically relevant characteristic is the physical features and quality of the commodity, the contractual term of the controlled transaction, such as volume trade, period of the agreement, term of the credit for the commodity transaction. So for commodity transaction, the taxpayer need to provide the evidence of price setting policy, meaning when they need to so taxpayer need to provide the evidence. The type of evidence that can be provided to the IRBM is transfer pricing documentation, meaning the agreement between the buyer and the seller, the broker price, or maybe premium or discounted apply for the commodity transaction and the pricing date.
So
So,
why do you think that the RLB will need all this documentation?
okay. Yeah.
As a proof, doctor, as a proof that they're using the arms price.
To prove that the price that they sell to their controlled panti is within the arm's length. So it's not too low, it's not too high.
Yes, thank you.
All right.
Okay, next is intangible. Then, oh, oh, oh. Okay, for public ruling, for intangible, it's too many. So I'm trying to take the simple one to explain the intangible process. So, in public ruling, in line with the revised or ECD guideline, the transfer pricing guideline outline the following necessary step in assessing intangible transaction. So the necessary step is the first one is identifying the intangible. So the taxpayer need to identify the intangible use or transfer in the controlled transaction together with the economically significant risk associated with the DMP of the intangible. Meaning, so the EMP of intangible is development, enhancement, maintenance, protection, and exploitation. So the next one is analyze contractual term. So they need to analyzing the contractual agreement between the contractual agreement of the transfer pricing for intangible, which is the legal ownership of the intangible and condition of the legal agreement between the seller and the buyer. And next is functional analysis. Functional analysis need to be done to identify the party performing economically significant function using asset and managing risk related to the EMP of the intangible. So, for example, next those. So, for example, of intangible, taxpayer paying your royalty need to provide evidence for underlying intangible process the utilize the intangible benefit obtained economically significant risk associated with the DMP of intangible and withholding tax payment. IRB will disallow royalty payment if it is not demonstrate that the royalty currently paid is for newly developed or enhanced intangible, especially where the original intangible have become obsolete over the year. Okay, that's all.
Penat Zahir. Pressure Zahir.
All right. Next for is the transfer pricing documentation. Malaysia using the OECD three-tiered approach on transfer pricing documentation, which mean three reports, which is master file, local file, and country by country report. Taxpayer have to prepare the country by country report, have to prepare a master file and submit it together with regular transfer pricing documentation upon request by the RRB. Regular transfer pricing documentation is explained in the transfer pricing documentation 2012. The requirement to the master file are very similar to those prescribed on OECD price, base erosion and price profit shifting action 13. There is no requirement to prepare local file in addition to the general documentation. Next, Los. This is the three documentation by the OECD, master file, local file, and country by country report. The master file provides an overview of the multinational group business, which is value drivers, intangible financial arrangement, and supply chain. However, the master file is only required if the group headquartered in Malaysia and has consolidated revenue exceeding 3 billion, and or the group is required to prepare a master file in any other location. Next is local file, local transfer pricing documentation, which substantiates the arm's length nature of the intercompany transaction. Country by country report, this is This is addressed under the income tax country by country reporting rules 2016. You can Google this. That's quite long about the country by country report. To keep in short, it is a report that differentiate by the regional part of the transaction. So they are reporting on the region, country by country. They bezakan. Next, those. This is from the transfer pricing documentation 2012, which require the company to include organization structure, group financial report, nature of business, industry and market conditions, control transactions, pricing policies, assumptions, strategies, and information regarding the factor influence in setting the policies, comparability, functional and risk analysis, selection and application of the transfer pricing method, which is the 5 of those methods. So this is needed in the general documentation. And it must be prepared on the contemporaneous nature, which is the document is prepared on the same time as the thing is happening. Annually based on the current reliable data and updated at the end of the relevant year assessment. It is not required to submit at the filing of tax returns. However, it should be made available by the IRB within the 13-day upon request. In preparing the documentation, the arm's length transfer price must be determined before pricing is established based upon the most current reliable data that is reasonably available at the time of the determination. This is the arm's length price. This is the meaning of contemporaneously. Next, those. However, there are the threshold within the scope which company must use this to have those information in the general documentation. They says that for those who gross income exceeding 25 million and the total amount of related party transaction exceeding 15 million, and for those who offer financial assistance, the threshold is 50 million. Which means, however, this two threshold is not applicable to permanent establishment. For those who are under this condition, the below the threshold, limited documentation can be used for them, which only cover the organizational structure, description of control transaction, and relevant pricing policy, rather than the full documentation requirement. Next is about the penalties. Penalties is when the company failed to submit documentation within 30 days of the IRB request. That is the non-compliance. The penalty is, if there is no contemporaneous transfer pricing documentation, the penalty is 35% of 35% of 35%. If the transfer pricing documentation is prepared but not according to guidelines, the penalty will be 25%. However, different penalties apply when they obstruct or interfere with the transfer pricing audit, or when you fail to comply with the arm's length principle after previous transfer pricing audits done by IRB. The penalty is then increased by 20% as compared to the last penalty imposed, but the sum cannot 100% of the amount tax under charge. That is the penalty. And next, so we can conclude that if you follow the guideline, you will get a lower penalty. However, if you fail to have a full documentation or the required documentation, you get a higher penalty. That's all. Questions? This is our reference. Questions?
I have a question.
Yes,
actually, I
Tamir.
have two questions. First is how can the company determine which transfer pricing method would adhere to the Armlang principle? And my second question is, what's the difference between the controlled and uncontrolled transaction?
First, I go to answer the second question first. To determine the uncontrolled or controlled transaction is when the company have control over the other companies, the subsidiary or the as as such as 20% or more and other related that the new the new the new three things about what is control. For the first question about the method, there are 5 methods basically for transfer pricing, which is CUP, resale price method, and other 3. To determine which is the best to use is according to the company itself. But as Anik has present about commodity, the CUP will be the best to use in determining the arm's length, the transfer pricing method for commodity. So it's depend on the company. Is it answer your question?
Okay. So if the company chooses one method, but then the IRB say this method is not appropriate, then will the company be subject to penalty?
Yeah, that's why they should have the knowledge on what is acceptable and which is not acceptable. This is where the firms like PwC, EY, KPMG, and so on comes and give their advisory on transfer pricing, which is the best and which is under the law.
Okay, thank you.
Right, good question.
Yes, doctor.
Okay lah. Okay. Sekarang ni baru nampak. Boleh. So it means that whether control or not, you have the definition of a controlled transaction kan tadi? You have the definition for that. So then you see whether you fall into the controlled or uncontrolled transactions. And the method, there are 5 methods, and company can choose which one is most applicable to them. And most of the time, but I think that it goes back to the consistency lah. Right, tak adalah this year you go method number 1, next year you go for method number 3. No. Once you choose the method, it has to be consistent over the years.
Yeah, it must be comparability, if I'm not mistaken.
Yeah. Okay. Any other question? Tak ada. Okay, thank you for the group. Tadi Anik Hazir ke Hazir Anik, nama bapak siapa? Nama anak yang mana ni?
Zahir. Zahir Anik ada. Zahir Anik bin Zulkifli.
Betul lah. Okay, I letak Zahir je. I tak cari full name lagi. Okay. Alright, thank you. We have 10 more minutes. The next group, siapa next group? The earning stripping rules kan? Mana group? Cepat tak? Time. How you want to present today or you want to postpone?
Doctor. Our group is present about earning stripping rules. But we think macam tak sempat, Doctor.
Because I know that this topic pun heavy juga. Earning stripping rules ni. Dia macam interest restriction kan? It's technical a bit kan?
Yes.
Ada group yang lain yang simple-simple sikit? We holding tax boleh pejam mata je. Okay, tak apa. Okay, have you decided on the, so maknanya satu group je hari ni? Sekejap nanti I kena tengok balik tarikh ni. Kalau hari ni satu group je, next. Okay, can we try untuk next class, we try 3 group boleh tak? Sekejap ya, let me see. Lama apa ni? Share. Alah, I cannot share lah. Kenapa? You need permission to use screen recording on your computer. Tak payahlah lambat. So next week, hopefully in 2 hours, maybe kita, sebab I think that group relief, okay. Withholding tax pun okay. We may have 3, the most is 4. 4 in 2 hours boleh tak? We'll see how lah, yeah. So today we can only have 1 transfer pricing je. And the group that have presented, can I have your slides? I think that the other group dah bagi, so that I can share in the Google Classroom, so that other students can have a look at the slide for reference in the final exam. What about your midterm test? Have you decided on the date?
Doctor, is it possible to do after mid-sem break?
I don't mind. But you have to decide lah among yourself when is the best time and the best day untuk buat exam tu lah.
We think if Friday okay kot.
Nanti you decide.
Okay.
Wong? Yeah, you check with your friends because maybe you ada test juga kan. Bila semester break?
Next week. Oh, next
week. So you all lambat. Okay, so later you decide lah. So topik je sampai investment holding je. Alright, topic, all this presentation topic will be your final exam, ya.
Okay, Doctor.
Doctor.
Yes.
I have question.
Yes.
For the topic tourism incentive, they don't.
Tajuk apa?
Tourism incentive.
Okay, tourism. Okay.
It didn't have direct topic in the taxation book.
Oh,
So-
then you have to look from other sources lah juga.
Oh, okay, Doctor.
Normally, you ada incentive ni, dia ada banyak, you nak tengok because that is the latest incentive, yeah. So tourism, of course, you kena relate dengan COVID barunya.
Okay,
Right, so
Doctor.
what are the incentive provided by the government in order to protect the tourism industry, especially with the current lah, right? And then how do government, yalah sekarang pun PKPB kan, tak boleh nak pergi juga. But then take into account lah those tourism. But because tourism pun dia punya mainly sama ada nak go for kind of exemption against your statutory income or you nak go for your macam ITA macam tu, right? It's just that nama tourism incentive. But you have to add on the latest punya lah. Yeah?
Okay, Doctor.
Alright. Any other question? Tak ada ya? So I think that's all for today. Thank you for your participation. I have to apologize to other groups that you are not able to present today because of the time. Because I don't mind the transfer pricing do more than 15 or 20 minutes because the topic is lengthy. Alright, and I don't actually understand the first few. Right, bila ada tanya tu baru I terbangun sekejap lah baru tidur. Alright, so remember that when you present, alright, try not to read the slides, the lengthy wordings in the slide, but try to make your audience understand the topic. Yeah, not to ask your audience to read your slides. Alright, can you do that? Try lah, yeah. It's all about experience. Okay, so with that, please make sure that you do still have my attendance punya Google form. Because I think that less people are actually now fill up the attendance form. Yeah, please do so for your attendance. So because that attendance I will have to submit to your university. Yeah. So I think that's all for today. Thank you again. I'll see you inshallah next class Wednesday.
Okay, Doctor. Thank you.
Alright.
Thank you, Doctor.
Alright. Bye.